Based on the historical data and forecast, Bitcoin has been exhibiting a downtrend, particularly noticeable in the recent days. The forecast for the next week indicates a continued decline, with prices potentially reaching $72,400. The RSI consistently below 50, with dips below 40, confirms this bearish momentum and suggests oversold conditions. The Bollinger Bands also support this view, with prices frequently touching the lower band, indicating increased volatility and downward pressure. Given this analysis, I recommend a short selling strategy. The entry price for this short position should be $73,900, capitalizing on the forecast decline. A stop loss should be placed at $75,100 to protect against a potential rebound. The initial target price is $73,000, aligning with the forecast price for April 14, 2025. However, if the downtrend persists, we can adjust the target price to $72,400, the lowest forecasted price for the week. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, Ethereum exhibits a clear downtrend, particularly evident in the recent sharp decline and the projected lower prices for the next week. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands confirm this trend, with the price consistently trading near the lower band. Given this information, my strategy focuses on capitalizing on this downward momentum. I recommend a short position initiated at $1,550, coinciding with the first forecast price. A stop loss should be placed just above the upper Bollinger Band at $1,520 to limit potential losses if the price unexpectedly reverses. The target price for this short position is set at $1,290, aligning with the forecast price for April 14, 2025, and a considerable distance below the current price, offering a substantial profit margin. To further enhance risk management, consider a trailing stop-loss strategy, adjusting the stop-loss level as the price declines. This would help secure profits while allowing the position to remain open if the downtrend continues beyond the initial target. This strategy combines technical indicators with forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, XRP shows a clear downtrend. The price has been consistently falling from March 26, 2025, and the forecast for the next week indicates further decline. The RSI consistently below 50, and approaching the oversold level of 30, confirms the bearish momentum. Considering the Bollinger Bands, the price is nearing the lower band, suggesting potential for a further dip. I recommend a short position strategy with an entry price of $1.89 on April 9, 2025. Set a stop loss at $1.93 to protect against unexpected upward movements. The initial target price should be $1.75, aligning with the forecast and the lower Bollinger Band. To maximize potential returns, I suggest a tiered target approach. After reaching the first target of $1.75, consider moving the stop loss to break even at $1.89. The second target price should be $1.64, based on the forecast. If this target is hit, reassess the market conditions. Given the strong downtrend, a third target of $1.61 can be set, but with a wider stop loss at $1.64 to account for increased volatility. This strategy combines RSI, Bollinger Bands, and forecast data to capitalize on the predicted decline of XRP while managing risk effectively. Based on the historical data and forecast, BNB is currently in a downtrend. The recent price action shows a consistent decline, supported by the decreasing RSI values, which have fallen below 40. The forecast for the next week indicates further downward pressure, with prices expected to reach as low as $509. Considering the support level at $530 and the decreasing momentum, I recommend a short selling strategy. Our entry price will be $552, with a stop loss placed at $556 to protect against a potential reversal. The initial target price will be $530, coinciding with the established support level. To refine our strategy, we will incorporate the Bollinger Bands. The price is currently trading below the lower band, indicating potential for further downside. we will implement a tiered target approach. If the price reaches $530, we will take partial profits and move our stop loss to break even. Subsequently, we will set a second target at $520, aligning with the forecast price. This multi-stage approach allows us to capitalize on the downtrend while mitigating risk through strategic stop-loss adjustments and profit-taking. This portfolio will be 60% short selling and 40% waiting for the price to reach the bottom of the Bollinger Bands. Based on the historical data and forecast, Solana exhibits a downtrend. The price has consistently been decreasing from March 26, 2025, with a forecast predicting further declines. The support price remains steady at $99.9, while the resistance price is $108. The RSI values are generally below 50, indicating a bearish momentum, with recent values dipping below 35, suggesting oversold conditions. Considering the downtrend and oversold RSI, I recommend a short selling strategy. Enter a short position at $106. Set a stop loss at $108 to protect against a potential reversal. The initial target price is $92.7, aligning with the forecast for April 9, 2025. To refine the strategy, I'll incorporate the Bollinger Bands. The price is consistently trading below the middle band, further confirming the downtrend. If the price approaches the upper band, it could signal a temporary pullback before resuming the downtrend. Therefore, I'll adjust the target price to $92.3, the lowest forecast price. The combined strategy involves entering a short position at $106, setting a stop loss at $108, and targeting $92.3. This approach combines the RSI's oversold signal with the Bollinger Band's trend confirmation and the forecast's price predictions for a high probability, high return investment. Based on the historical data and forecast, TRON has been fluctuating within a narrow range, with a support price of $0.23 and a resistance price of $0.232. The RSI indicates periods of both overbought and oversold conditions, but generally remains near the midpoint, suggesting a neutral trend. The Bollinger Bands have been contracting recently, indicating low volatility. Considering the forecast data, which predicts prices around $0.23, I recommend a cautious strategy focusing on short-term movements. My strategy will involve a combination of RSI and Bollinger Band signals. I will enter a long position at $0.231 when the price touches the lower Bollinger Band and the RSI is below $47.6. The stop loss will be set at $0.229, just below the support price and the lower Bollinger Band. The initial target price will be $0.232, the resistance level. If the price reaches the resistance, I will move the stop loss to the entry price of $0.231 to protect profits. I will hold the position until the RSI reaches $80 or the price breaks below the support level of $0.23. This approach balances risk and potential reward in a sideways market, capitalizing on short-term fluctuations while protecting against significant losses. Based on the historical data and forecast, Dogecoin exhibits a downtrend, consistently approaching the support price of $0.131. The RSI consistently dips below 50, indicating weakening momentum, and the forecast predicts further decline. Considering this, a short selling strategy is recommended. We will initiate a short position at $0.15, placing a stop loss order at $0.16 to mitigate potential losses if the price reverses. The initial target price will be $0.136, aligning with the forecast and support level. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, and we can consider covering the short position partially at $0.14. If the price breaks below $0.136, we will adjust the target price to $0.126, reflecting the continued downtrend. This multi-tiered approach allows for profit-taking while managing risk effectively, aiming for a high return in this bearish market. Based on the historical data and forecast, Cardano exhibits a clear downtrend. The price has been consistently declining from 0.729 to 0.505, and the RSI consistently stays below 50, indicating weakening momentum. The forecast data further supports this trend, predicting a continued decrease. Given this, I recommend a short selling strategy. Entry price should be $0.59. The stop loss should be placed just above the upper Bollinger Band on April 9, 2025, which is $0.577. The initial target price is $0.505, aligning with the forecast for April 15, 2025. To maximize returns and manage risk, I suggest a tiered approach. The first target is $0.505. If the price hits this target, take 50% of the position off the table. If the price continues to decline, move the stop loss to break even around $0.59 to protect profits. The second target price is $0.512. If the price reaches this target, take the remaining 50% of the position off the table. This strategy combines trend following with risk management, capitalizing on the downtrend while limiting potential losses. Based on the historical data and forecast, TRON demonstrates a downtrend, particularly evident in the recent decline and the projected lower prices for the next week. The RSI consistently hovers below 60, indicating a lack of strong bullish momentum, and has recently entered oversold territory, dropping below 40. Considering the support price of $2.92 and the forecast prices, I recommend a contrarian strategy focusing on short-term gains. The Bollinger Bands indicate potential volatility, with the price frequently testing the upper band. My proposed portfolio combines three strategies. First, I suggest a long position when the RSI falls below 35, entering at $3.27 with a stop loss at $2.92, near the established support level. The initial target price is $3.45, the resistance level. Second, when the price touches the upper Bollinger Band, consider taking profits or reducing exposure. Third, if the price continues to decline and reaches $3.01, enter a long position with a stop loss at $2.92 and a target price of $3.25. This combined approach leverages the oversold conditions, volatility, and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Chainlink exhibits a clear downtrend. The price has been consistently declining from March 26, 2025, and the forecast for the next week projects further price drops. The support price remains stable at $10.5, while the resistance is at $12.9, indicating a limited upside potential. The RSI consistently falls below 50, often dipping below 30, suggesting oversold conditions. However, given the overall bearish trend, these oversold bounces are likely to be short-lived. The Bollinger Bands show that the price is approaching the lower band, further confirming the downward momentum. Therefore, I recommend a short selling strategy. We will initiate a short position at $11.5 on April 9, 2025. Given the strong downtrend and the forecast, a conservative stop loss will be placed at $12.9, just below the resistance level. The initial target price is set at $10.4, aligning with the forecast for April 10, 2025. If the price continues to decline, we will adjust the target price to $10, based on the forecast for April 11, 2025. This strategy combines technical indicators and price forecasts to capitalize on the prevailing bearish sentiment, aiming for high returns while managing risk with clearly defined stop loss and target levels. Based on the historical data and forecast, Jito is exhibiting a clear downtrend. The price has been consistently declining from a high of 2.39 to a low of 1.56, with the forecast indicating further downward pressure, potentially reaching 1.32. The RSI consistently remains below 50, and frequently enters oversold territory below 30, suggesting strong selling momentum. The Bollinger Bands confirm this trend, with the price consistently trading near the lower band. We will implement a short selling strategy, capitalizing on this downward trend. Our strategy will be a combination of RSI and Bollinger Band signals. We will enter a short position at 1.66, placing a stop-loss order at 1.56, just above the established support level. This will limit potential losses if the price unexpectedly reverses. Our initial target price will be 1.32, aligning with the forecast. We will then reevaluate the situation and adjust the target price based on market conditions. If the price reaches 1.32, we will consider taking partial profits and setting a trailing stop-loss to protect gains and potentially capture further downward movement. This portfolio is designed for high returns by capitalizing on the current downtrend and utilizing technical indicators for precise entry and exit points. Based on the historical data and forecast, Maker has shown significant volatility, with periods of both upward and downward trends. The support price consistently remains at $1,210, while the resistance fluctuates around $1,280. The RSI readings indicate a generally neutral to slightly oversold condition, with values frequently dipping below 50. Considering the forecast for the next week, the price is expected to continue a downward trend, potentially testing the support level. I recommend a short selling strategy targeting the resistance level. The entry price for this short position should be $1,280. A stop-loss order should be placed slightly above the resistance at $1,300 to limit potential losses if the price unexpectedly reverses. The target price for this trade should be the support level at $1,210, offering a substantial profit margin. The Bollinger Bands confirm this downward trajectory, as the price has been nearing the upper band, suggesting a potential pullback. This combined strategy, utilizing RSI, Bollinger Bands, and support/resistance levels, provides a balanced approach to capitalize on the predicted downward movement of Maker. Based on the historical data and forecast, Internet Computer has been in a downtrend, with prices consistently approaching the support level of $4.57. The RSI consistently indicates oversold conditions, particularly dropping below 30 on April 1, 2025, suggesting potential for a bounce. The Bollinger Bands show that the price has been trading within the lower band for a while, confirming the downward pressure. Considering the forecast for the next week, which predicts a continued decline, a short position is warranted. We will enter a short position at $4.64, with a stop-loss placed just above the upper Bollinger Band at $5. Our initial target price will be the next support level, which is $4.12, aiming for a quick profit from the anticipated downward movement. To refine the strategy, we'll incorporate the RSI and Bollinger Bands for dynamic adjustments. If the RSI rises above 50, indicating a shift in momentum, we'll close the short position and reevaluate. Conversely, if the price touches the support level of $4.57 and the RSI remains below 30, we'll tighten our stop-loss to $4.6. If the price continues to decline and reaches $4.12, we'll consider extending the target price to $4.13. This combined approach leverages both trend analysis and technical indicators to maximize profit while minimizing risk. Based on the historical data and forecast, PAX Gold demonstrates a declining trend, supported by the decreasing forecast prices from $30.20 to $29.40. The RSI values fluctuate between 43.6 and 74.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Considering these factors, I recommend a short selling strategy with an entry price of $2,950. A stop-loss should be placed at $2,970 to protect against unexpected upward movements, and the initial target price is set at $2,940, aligning with the forecast. To refine this strategy, we can incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we could consider covering the short position and potentially going long. Conversely, if the RSI reaches 80 or above, indicating an overbought condition, we could close the short position and prepare for a potential long entry. This dynamic approach, combined with the Bollinger Bands indication of a potential pullback, aims to maximize profits while minimizing risks. The final target price is set at $2,900, allowing for a buffer against short-term fluctuations. Based on the historical data and forecast, BNB is currently in a downtrend. The recent price action shows a consistent decline, supported by the decreasing RSI values, which have fallen below 40. The forecast for the next week indicates further downward pressure, with prices expected to reach as low as $509. Considering the support level at $530 and the decreasing momentum, I recommend a short selling strategy. Our entry price will be $552, with a stop loss placed at $556 to protect against a potential reversal. The initial target price will be $530, coinciding with the established support level. To refine our strategy, we will incorporate the Bollinger Bands. The price is currently trading below the lower band, indicating potential for further downside. We will implement a tiered target approach. If the price reaches $530, we will take partial profits and move our stop loss to break even. Subsequently, we will set a second target at $520, aligning with the forecast price. This multi-stage approach allows us to capitalize on the downtrend while mitigating risk through strategic stop-loss adjustments and profit-taking. This portfolio will be 60% short selling and 40% waiting for the price to reach the bottom of the Bollinger Bands. Based on the historical data and forecast, DeXe has shown volatility with a recent dip and a potential for upward movement. The RSI consistently remained below 80, indicating that the asset is not overbought. The forecast prices suggest a stable range between $15.1 and $15.4. Considering these factors, I recommend a long position strategy. The entry price should be $15.1, coinciding with the first forecast price. A stop loss should be placed at $14.7, the established support price, to mitigate potential losses. The initial target price is $15.6, referencing the recent high. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading near the lower band, suggesting a potential bounce. If the price touches the bottom of the Bollinger Bands at $13.4, it's a strong signal to enter a long position at $13.6. In this scenario, the stop loss would be set at $14.7, and the target price would be $17.4, the previous resistance level. This combined strategy leverages both RSI and Bollinger Bands to optimize entry and exit points, aiming for high returns while managing risk effectively. Based on the historical data and forecast, JasmyCoin exhibits a clear downtrend. The price has been consistently approaching the support level of $0.00924, and the forecast suggests further decline towards $0.00789. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential continuation of the current trend. Therefore, I recommend a short selling strategy. We will enter a short position at $0.0101, placing a stop-loss order at $0.012 to limit potential losses if the price unexpectedly reverses. The initial target price is $0.00924, aligning with the established support level. To maximize returns, we will implement a tiered profit-taking approach. Once the price reaches $0.00924, we will take 50% of our position and move the stop loss to the entry price of $0.0101. If the price continues to decline, we will target $0.008, taking another 30% of our position and adjusting the stop loss accordingly. Finally, if the price reaches $0.00789, we will close the remaining 20% of our position, securing the maximum profit. This strategy combines technical indicators and support/resistance levels to create a well-defined, risk-managed short selling opportunity. Based on the historical data and forecast, TRON has been fluctuating within a narrow range, with a support price of $0.23 and a resistance price of $0.232. The RSI indicates periods of both overbought and oversold conditions, but generally remains near the midpoint, suggesting a neutral trend. The Bollinger Bands have been contracting recently, indicating low volatility. Considering the forecast data, which predicts prices around $0.23, I recommend a cautious strategy focusing on short-term movements. My strategy will involve a combination of RSI and Bollinger Band signals. I will enter a long position at $0.231 when the price touches the lower Bollinger Band and the RSI is below $47.6. The stop loss will be set at $0.229, just below the support price and the lower Bollinger Band. The initial target price will be $0.232, the resistance level. If the price reaches the resistance, I will move the stop loss to the entry price of $0.231 to protect profits. I will hold the position until the RSI reaches $80 or the price breaks below the support level of $0.23. This approach balances risk and potential reward in a sideways market, capitalizing on short-term fluctuations while protecting against significant losses. Based on the historical data and forecast, Zcash exhibits a downtrend. The price has been fluctuating within a range, but the forecast indicates a continued decline towards $33.6. The RSI consistently falls below 60, with a recent dip below 50, suggesting weakening momentum. The Bollinger Bands show a narrowing range, which often precedes a significant price move. Given these factors, I recommend a short position. We will enter a short position at $36.8. The stop loss will be set at $35.9, just above the forecast price for the next day, to protect against a potential reversal. The initial target price is $35, aiming to capture a substantial portion of the predicted decline. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI reaches an oversold level below 20, we will consider covering the short position or taking profits. Conversely, if the price touches the bottom of the Bollinger Bands at $33.6, it signals a potential support level, and we will reevaluate our position. The second target price will be $34.2, and the final target price will be $33.6, aligning with the forecast. This tiered target approach allows us to maximize profits while managing risk effectively. Based on the historical data and forecast, NEO exhibits a clear downtrend. The RSI consistently remains below 30, indicating an oversold condition, and the forecast predicts further decline. The support price of $4.73 acts as a potential floor, while the Bollinger Bands suggest increased volatility. Given this scenario, I propose a short selling strategy. We will enter a short position at $4.48, placing a stop-loss order at $4.73 to limit potential losses if the price unexpectedly reverses. The initial target price will be $4.15, aiming to capitalize on the anticipated downward movement. To refine this strategy, we will implement a dynamic target adjustment based on the Bollinger Bands. If the price reaches $4.15, we will move the stop-loss to break even at $4.48, securing the initial profit. Subsequently, we will adjust the target price downwards to $3.96, aligning with the lower band and anticipating further decline. This adaptive approach combines the RSI's oversold signal with the Bollinger Band's volatility indicator, creating a portfolio with efficient risk-reward ratios. The final target price will be $3.96.